Well, let's talk a little bit more about some of those concerns that Will mentioned there with Vicky Pryce, who's an international economist. Always great to have you on Global Business, Vicky. Is this really a trade deal or a managed truce between the EU and the US?
It definitely leaves the EU in a worse position vis-à-vis the US, because if you remember where we used to be, the US had a tariff of about 2.5% on average on EU goods, and the EU had a tariff of 10%. So it was actually in a better position all that time ago, which is before the reciprocal tariffs, which President Trump announced in April of last year, if you remember. Yes, there is an improvement now to where we moved to in between. So a lot has happened during that period. And the truth is that it is a deal of sorts, because it reduces the high tariffs which had been introduced from April onwards. They had come down a little bit, but it is worth bearing in mind that there are still tariffs, and that's why this deal is perhaps a bit of an improvement, because it goes down to just 15%. Yeah. There are still higher tariffs on steel and aluminium imported into the US. There actually, on some counts, if you look at contents of various things, about 50%. There are still tariffs on cars and trucks imported into the US, which are higher than the 15%. So they're about 25%. So if you look at those tariffs, this is why you could argue that this is an improvement, because there is now almost an obligation by the US to reduce those to the just 15%, which was supposed to have been what was agreed about a year ago in Scotland.
Yeah. So has free trade between the US and Europe effectively ended?
Yes, it's not free trade. This is a sort of trade deal, if you want to call it that in inverted commas, which is giving the ability to the US to impose tariffs at 15% when the EU is going to be imposing tariffs on industrial products and some agricultural goods at 0%. So it is an agreement, if you like, to not make things worse. But at least what the EU has now done, and this is what you were talking about before with the correspondent from Brussels, is that at least we have some guardrails, some safeguards. The MEPs of Parliament have insisted that there should be a look at what happens between now and the end of this year. And if some of those tariffs that I mentioned before, which are considerably higher than 50%, do not come down to the 15%, they can revoke that deal, inverted commas, that has just been agreed.
So can the EU really trust the United States to stick to this deal, you know, given how politically fragile it is? You know, the US isn't happy about the EU digital regulation. I mean, could we have more surprise tariffs?
Well, yes, I think you mentioned before the tariffs that President Trump says he might impose 100% on French wines because they have this digital sales tax, which they're imposing of 3%. But yes, things could move. But we've got to bear in mind that at the same time, President Trump does want, with a look at what is going to perhaps be happening in November when we have the midterm elections, he wants to see the economy moving again. And there is no doubt that even on the tariff front, a lot of pressure has been put on President Trump to ease that, because, of course, costs are going up for companies that are importing things into the US, and they have to pass them on to consumers. He doesn't want high inflation, and he doesn't actually want also to be politically sort of disadvantaged, if you like, by those tariffs hurting consumers. And I think that's what he's looking at. He wants to see lower interest rates. We're not going to have lower interest rates unless you have also lower inflation. So everything that adds to the cost in the US coming from tariffs is bad for him. So in many ways, you could argue that perhaps between now and the end of the year, certainly until November, we might see the willingness to abide by these rules. But one has to then watch what may happen afterwards.